Now we'll look at the stock market, some specific names. Jenny Horne, co-host of Next Gen Investing, is with me. We'll start with Oracle, one of the names to watch that did receive an upgrade this Monday morning. Let's hear a little about that.
It did, and I will say that a name that posted 2 weeks ago its best week since 2001, and then last week we had another winning week, up 2.5%. So starting things off on this holiday-shortened week quite nicely, I will say. So when you look at Oracle and some of the performance we just have seen over the last several sessions, we saw all-time highs made last week, alongside some of the nice strength we saw in NVIDIA and Microsoft, which also did touch new all-time highs last week. But Stifel feels there's still some optimism to be had with an upgrade to buy from hold. Price target of 250, raised from 180. So some decent, obviously, upside from their previous levels, even from where we closed on Friday, but highlighted the recent dramatic step up in CapEx and remaining performance obligation gains should support management's cloud growth expectations, and that these cloud gains should generate accelerating revenue increases in the coming years. So that was actually something specifically highlighted by Oracle's management on their previous earnings call, where they basically said, hey, we not only expect our pace of revenue to be sustainable, but we actually expect it to accelerate now for the foreseeable years ahead. So that is amazing in itself, and also definitely something that has resonated well with the analysts. But they did also say, well, the higher CapEx right now spending will just lead to additional near-term gross margin compression. There is no question that management is extremely adept at being able to manage expenses. And they also believe the combination of these sustainable now cloud growth and operating expense trends should also enable Oracle to overcome its mix shift headwinds and post-accelerating earnings growth into fiscal 2027 and beyond. So one of the latest names driving, a huge part of this really nice AI recovery story. So many of these names had just fallen to levels we hadn't seen in years, frankly, but have been able to recover really nicely. Oracle definitely has now, skews extremely optimistically. You do have, of the 40 or so analysts, 25 roughly do rate it at buy. There's 15 holds, and this actually would be the highest price target among analysts. It's 250. So they're definitely in as bullish of a camp as we see right now. Lowest price target is 170, but at the midpoint, it's 215. So there's definitely still some at least moderate implied upside, about 2.5% from where we closed, when you take the average consensus among the analysts that cover Oracle right now.
Yeah, I like that you're covering what all the analysts are saying, and also just the median price target and all that. They also had to raise the price target. Their price target was 180. It's at 225. Yeah. Sort of got to get in there and at least put a 225 on it if you like it. But they put a 250, which shows that they still have upside potential, right?
I believe that, and it definitely, at least skewing as optimistic as we see among analysts, 250s matches the high. So I do always think it's a catch-up call a bit when you see things move from 180 to 250, and I will be curious to see a theme of this week if we continue to see more and more of these, perhaps not pessimists, but maybe just those that took a more neutral stance in the wave of volatility we've seen, if they're now saying, okay, based on performance, based on price, we have to right-size our price target here because we are not in the same stretch of downward pressure that we were to start, what was the previous earnings season. So I will be curious to see if this is a theme, because a lot of analysts turned a bit more cautious on tech, and it seems like right now the consensus is everyone's now optimistic again.
All right, let's talk about HPE Enterprise Juniper, and these are two names on the move, and this merger getting closer?
Getting closer. So at least making some progress here is as both companies did announce they've reached an agreement with the U.S. Department of Justice, subject to court approval, that resolves the DOJ's lawsuit that challenged the acquisition and hopefully clears the way for the transaction to close. This has been a pain point of uncertainty just because there wasn't really a whole lot of clarity on the issue. It wasn't really highlighted on HP's earnings call either, which I thought was a bit odd. But upon the close of the deal, the combined resources of HPE and Juniper are expected to drive faster innovation across silicon network systems and software to meet their customers' increasingly complex connectivity needs, is what they said in the statement. So we know on January 9th, this was first announced in an all-cash transaction valued at around $40 a share for Juniper, representing an equity value of approximately $14 billion. So the agreement will now satisfy, hopefully, these concerns that did say that basically this transaction was going to limit some of the competition in this space. But right now, as part of the settlement, HPE has agreed to divest its global and instant on-campus and tranche businesses. After close, HPE will facilitate then limited access to Juniper's advanced MIST AIOP system technologies. So that is supposed to satisfy now the DOJ. So the intended benefits for the deal, they did say, still do remain intact even with these provisions. But next, of course, we just need to see a finalization of this deal, which I believe we're still that still is what we need. The next hurdle is this to be officially approved and done and over with. But at least this is a huge milestone for those that have been saying, hey, we need some clarity on this deal.
Right, understood. I mean, look, and also the Department of Justice coming through. They reached a settlement. I mean, this was supposed to be sort of the theme of 2025 in this administration, about more deals, a regulatory environment that was more open and friendly to mergers and acquisitions and IPOs. And a lot of folks have been betting on the banks even for that reason. So that's also probably giving people some good feelings this morning to see that this is managing to go through a bit.
I completely agree. And I think that was something overwhelmingly economists, analysts were saying this is going to be an IPO favorable market and also a regulatory friendly market. And it feels like the only space that we've seen that actually hold true in so far has been Bitcoin. I know there's even still been some question there about the funding of cryptocurrency assets from the government, because that still, I don't think, has necessarily played out to the fruition that the bulls expected. Still a lot of year left, and I know we do mark quarter end, I believe, in the coming days, tomorrow, I believe, but that does still mean we have a whole half of this year left to see, hopefully, the IPO market improve as well as more of these mergers and acquisitions go through, because I was surprised to see names like PVH taking their deals off the table when we were expecting such a approval-friendly Department of Justice. So hopefully we start to see that sentiment improve, because I do think there's definitely an appetite for these mergers and acquisitions. There's just a caution right now, given, again, volatility in the market, as well as the scrutiny of these various deals. Like Alphabet, for one, has been one that's held that scrutiny all year long.
All right, Jenny Horne, great to see you. Thank you so much. Good luck there. Some names to watch this morning as we're getting ready to do the trading open and hit some records on Wall Street once again.